What's up, guys? So today I'm going to go over a weekly outlook of kind of what we've seen and what I expect to go moving on forward. So let's get into it. First and foremost, we're going to go over our trend journal that we use and that we keep track of. We are on day 12 of a downtrend. On the 17th, we turned the market into a downtrend saying, hey, we are looking bearish. Instead, we broke below our 21-day moving average and our model turned bearish. So we have been in a downtrend ever since. That was day 0, and now we are on day 12. And so on Friday, we had a test of the 200 EMA. We also had the biggest day in VIX in over 2 years. So that was kind of a crazy move in the VIX. And then the leaders of the market on Friday were utilities, consumer staples, and bonds. So what does that tell you? That is a risk-off environment. Those are all defensive stocks and ETFs. So that is something that we are seeing is more of a risk-off environment instead of a risk-on environment. And that's kind of what we've seen throughout the last few weeks. So let's get into the weeds of it. NASDAQ, let's go to a weekly chart here. Get to our 40-week moving average and our 10-week moving average. Those are my key weekly moving averages. So your 40-week moving average is your 200-day moving average. So those equate to almost the same thing. And then your 10-week moving average equates to your 21 or your 50-day moving average. So those are why I use these. The 10-week and the 40-week tend to be institutional moving averages. Your 10-week, when institutions are doing more short-term, they're not getting in when it's below a 10-week moving average. And usually they're looking for being above that in order to have a good trend. And that's what we see when we're above a 10-week moving average, we see a healthy trend. Right here, we're above a 10-week, we see a healthy trend. When we're below a 10-week, we do not see a healthy trend as much. So that's kind of one thing I'm watching. One thing I am noticing is we do not have a fair value gap in any of these candles. So the last fair value gap on the weekly is way up here. So we're either going to have to create one soon or we're going to see some sort of reversal and a bounce. Next, let's go to a daily chart. Daily chart, we're right at your 200-day moving average, which is a key level. That's something that we tend to bounce off of when we bounced off of this year already before. Let's get our 50-day moving average now and our 21-day moving average. These are my two key moving averages on a daily chart, your 200, 21, and 50. Those are your key moving averages. So right here, we actually have a break below the 50-day moving average with your 21-day moving average. So this is what's called a power trend failure. And so this is the end of a power trend. A power trend is when your 21 EMA is above your 50-day moving average, and this allows for heavy moves. Pullbacks are meant to get bought. When you're below your 21-day moving average, and then when your 21-day moving average gets below your 50-day moving average, that's when you tend to see more down moves. So right here, we see down moves there. We see down moves there. As the 21 gets below, that's the failure. Boom, we kind of bounce, and then we just see a continuation, a downtrend small. And so that's possibly something that we're looking for, not necessarily showing any sign of anything yet. So next, look into a 4-hour chart. So actually with a daily chart, we were looking, our target for this week was this 18,500. That's what we've been talking about all week. We've been looking for it to come back up to it. We had a upside reversal, a huge up move, one of the biggest up moves of the year on Wednesday, coming right up to the 50-day moving average, coming right up to the 21-day moving average, and got rejected from both of them. And then on Thursday, again, got rejected from the 50-day and the 21-day. And that's showing that, hey, bears are still in control. They are not ready to give this up and they are still moving to the downside. And that's what we did. We continued and we continued. Now we're at the 200-day moving average. So we did not get a close below this day on the 31st, though. So that's a huge key. Is we didn't quite get the close that we wanted as a heavy displacement below. And then if we look into a 4-hour chart, again, we are not created a fair value gap since this level up here, 18,800 roughly. We did get heavy displacement below this low, and we're only just kind of manipulating it. So that would kind of make me look for a possible bounce over the next couple days early on in the week. and just kind of see what we have there. And so first level I would be looking for to bounce would be this 18,800. And that would be that moving the fair value gap in the 4 hour. It's also a fair value gap in the 1 hour and a nice set of equal highs right here. So very clean, very easy level to target. Next, if it gets above that and starts inverting that, I would look for this very large fair value gap on the 4 hour chart right up here. Again, a nice easy level to look for, very large, very a nice level to see. And if it does, you could even possibly kind of refine it down to this fair value gap on a 1 hour. So notice we have not created any fair value gaps on the 1 hour since this one on in Thursday afternoon overnight. So that would definitely be if we get some sort of displacement up outside of this consolidation range, kind of this level here. That's a nice little triangle. I like boxes better though. So if we get a nice little bounce and some displacement above these highs, then definitely we'll look for it to come to this 18,800 and see how it reacts there. Every time we get to one of these levels, we're going to get to a level and see how we react. If we're still showing bearish fair value gaps, if we're still respecting bullish order flow and not showing any signs of starting, then we'll most likely disrespect that level and move on to the next set of liquidity. So we've taken out external range liquidity. Now we're looking to come back into some sort of internal range liquidity. And so these are kind of a couple levels that we're looking for levels of interest for internal range liquidity. When it hits these levels, we break down into smaller time frames and then look to see is it displacing and continuing bullish order flow, or is it starting to show some sort of distribution and confirm that it's going to push back down to the downside. So next, the Russell. The Russell is one that we've been talking about for last week and the week before, because it was the leader. We are starting to see signs of possible movements to the downside. We had a failed break right above here. We didn't see any sort of displacement, manipulated all these highs, and then just continued down. So we are in a fair value gap on the weekly. We could bounce here, but we came down to it very, very fast and very heavy. So if we do create a fair value gap on the next day or so, we could look for something like this to move into and then possibly come back down to. I would expect it to come back down to this 2000 level if it doesn't bounce here. The Russell is not really a great trading asset, but it is an asset that's good for market breadth. And so whenever we're looking at a full market picture, I always like to look at the Russell to get more of a market breadth, because we haven't seen the greatest market breadth lately. We saw healthy where the market was running, the Russell was running with it, and tech was kind of pulling back and not doing anything. And now we're seeing a confirmation that both of them have been going down, tech and the Russell. So that's kind of interesting in what we've been seeing. Next, we'll go into the Dow. The Dow had this little like ILM style on the daily chart that I've been watching. We took out this high, created a fair value gap, inverted that fair value gap, and now has respected that as a resistance ever since. So that would take me for a target. We took out buy side liquidity. We're going towards sell side liquidity. And so that would be this low right here at 39,300. Nice round numbers. And that would be kind of where our target would be for the Dow if we continue lower. Next, VIX. VIX had its highest day in 2 years on Friday. So at one point in the day, we were actually almost up 60% on the VIX, which is an insane move. It's the biggest move we've seen on the VIX in almost 3 years. The 25% move, that's the biggest move in 2 years since February 2022. Well, the 60% move, that's the biggest move we had since 2020. And so we were watching on a daily, we were talking about this in our live streams in Playbit, that this is a level where it bounces. Over the course of years and years and years, this is a level where it bounces. As soon as it gets into like this 12, 13, $10 level, $11 level, this is where it bounces. And every single time it has a healthy bounce. This is 2013. So that's 10 years. Boom, we hit this level, we bounce. We hit this level, we consolidate, we bounce. We hit this level, consolidate, and bounce. And every time we have a healthy bounce. And that's exactly what we've seen. we've seen, and one thing that we also did in the VIX was we broke out from this long-term trend line. So this trend line is going back to January 1st, 2022, or January 24th, 2022. And now finally we are starting to break out. So that could be some sort of shift in trend where we could start seeing a possible move back up to these like 35, $40 levels on the VIX. No sign of it yet, just something that I'm always keeping an eye on and keeping in scenarios of what could happen. If we go to a daily chart like this, we had a heavy downside reversal, so we could pull back and see what happens as we go and then continue higher. This is a nasty little pullback and downside reversal, so I want to see definitely how we react over the next week or so. So historically, what you see is August being chop, and so I would like to see more chop than down moves in August. This was our first July that was red in 10 years, in over 10 years. And so that's where we are looking for a possible chop in August. And then September, historically, is the time where you see a larger down move. The average move over September over the last 5 years has been about 4 or 5% to the down move, a closing month. And that's where we are expecting moves down in September. So I don't want to see straight down coming into September. I want to see consolidation, possible retracements up, and some sort of distribution coming into September to see a down move if we are going to confirm a down move in September. Next, we're going to go to TLT. TLT is bonds. So when the market is in a risk-off environment, TLT tends to do better, and that's what we're seeing. TLT is kind of going up to the down to the upside. We've broken this trend line here, this long-term trend line. I don't care if you put it here or wherever you want to put it. We are breaking outside of this trend line. It's gone from March 2023, possibly equal even August 2022. We had created a higher low and now we're pushing up through it. So easy first target would be this 100. Then we have this set of equal highs right here at 110, which is a heavy move in bonds. 10% is a big move in bonds. So that's one thing that I'm going to be watching. When we do see heavy moves to the downside in equity markets, you do see moves to the upside in bonds a lot of times. This is your 2020 crash. We came up and we've seen a heavy move in the bonds. This year, 2022 was one of the, or yeah, 2022 when we had our last crash was one of the first times where we seen a correlation down move in bonds while we pulled back in equities as well. And so that's something that doesn't usually happen. You usually see as the equities go down, you see bonds continuing higher. So next we'll go into gold. We are still seeing these heavy top wicks on the weekly chart. Every time we come up to this 25 level, it tends to get rejected. The closing candle on the month for July wasn't terrible. We didn't get any sort of displacement up though. It has, so this level is keeps getting tapped over and over and over and creating a higher low every time it does. So that's one thing that I'm going to keep an eye on is if we start shifting and respecting bullish order flow, coming back to this gold and continuing, coming back up to this 25 level and continuing higher. If the market decides to continue lower and we're looking at some sort of risk off environment, then this would be a really good asset to continue higher. We do have this fair value gap right here in the 4 hour, which makes for an easy target. If we get above this, we're looking higher. If we start disrespecting, or if we start respecting this fair value gap, we can't get above it, we're holding it, then we also have a inverted fair value gap right through here. Then we'll be looking down towards either this 2400 level would be kind of an easy level to come to. Bare minimum 2450. Because if it comes up to here, respects it, then we would look to low hanging fruit would just be back to these lows. So gold, kind of choppy, not a really good not a really good determination of trend yet until it decides whether it wants to get above this or confirm it as resistance for lack of a better term, and then use that to push back down. Next, UJ, we were looking for it to come to this 146 level at this low. As soon as as soon as it took out these lows and really just started displacing up here, we confirmed this, held this as an order block. We decided, hey, we should probably just going to come to this low. And that's where it really went. So if we create a fair value gap over this next couple days, then we could use that as a target to come to for continuation lower. I would like to see some of sort of a bounce up to this 150 to 150, 150 to 152 level to show to take some sort of liquidity. We took out external range liquidity. Now we're looking to come to internal range liquidity. So once we start that, we will be looking to come a little bit higher for possible more moves to the downside. And that follows with DXY, where if we look at DXY on a weekly chart, we are just confirming bearish order flow. We came up here, respected this fair value gap, and now we're displacing as we're coming outside of it, which is showing a confirmation that we're looking lower. And when we are looking lower, we're looking for lows, and that would take me to this 102 35, 102.40 level for nice round numbers. So again, very similar. If we create a fair value gap on Monday, we'll look to come up into it on Tuesday, Wednesday, and then push lower. So that's where I'm looking for US dollar and UJ, similar to that. We'll want to see a fair value gap get created over the next few days, come up into that fair value gap and trade into it. We have an order block right here as well, and then push back lower. So Euro, I'm not really a currency trader. I think a lot of these currencies just look trash. These moves right here, it's just gone sideways over the last year. A sideways year or a NASDAQ year. I would rather trade where it's moving more, so I focus most of my energy on NASDAQ. But for those that do trade Euro, we have a very easy target right here. We have two equal highs, we have a higher low, and I'm pretty sure this was a fair value gap on a weekly chart. Yep, with an upside reversal. And so that makes me think that for low hanging fruit, very easy target is just going to be these highs right up here. Right up here. And then in a 4 hour, if we start coming back and pulling back, we could pull back into this fair value gap and see how we react at this fair value gap here. And if we react bullish and start respecting bullish order flow, that would be good levels to look for buys up to that high there. GBP doesn't look as good as the euro in my opinion. It has doesn't have as clean of highs to come to. And so I would be trading euro as a currency trader over GBP. Again, though, it's very similar. We are in internal range liquidity, came into a fair value gap on a weekly chart, and could be looking for external range liquidity at this high. So keep an eye. I personally would be trading euro over over GBP, but GBP has a lot longer till its target. It's it's farther away from its target than euro is. So that's what I'm looking at for the week. Looking for a possible bounce and or consolidation week. We'll see what happens. So I appreciate you guys for coming. We are live in Playbit every single day at market open or about 15 minutes beforehand coming into stream, and then we stream for about an hour or two, see how the market goes, and then we're finished. So we do that every single day. If you'd like to join Playbit, join our live streams. We kill it. We trade live there. We chat and we have a good time. Thank you guys all for coming. Enjoy the rest of your day.